Thank you, Deputy Governor. May I recognize the presence of the Deputy Minister of Finance, Honorable David Nagabo, the outgoing Governor, Dr. John P. Mahmoud, the Chairman of HR, for the Board of Directors of the Reserve Bank of Zimbabwe, Mr. Edwin Marikai, other board members here present, members of the Monetary Policy Committee, Deputy Governors, senior managers of the Central Bank, ladies and gentlemen. Let me begin by saying that this monetary policy statement that we are presenting this afternoon is a product of wide consultations. We interacted with the outgoing governor. In fact, we started talking about this monetary policy statement as late as last year. As the deputy governor said, we apologize for the delay in releasing the monetary policy statement, but it was because we wanted to fine-tune it and make sure that all the CPs are in place. So thank you, Governor, for the hard work that you put into coming up with this monetary policy statement. We also consulted with the bankers, CZI, Chamber of Mines, Civic Society, and also with some consultants that we got from international organizations like the IMF and the World Bank. And so the end product of all these consultations is this monetary policy statement which we are presenting today. This recalibrated monetary policy statement aims to address the current state of affairs insofar as price and exchange rate stability in the economy is concerned. It is informed by two pillars, namely restoration of price and exchange rate stability, and also remonetizing the local currency so that it serves its purpose as a medium of exchange and a store of money. As you know, one of the key functions of the Central Bank is price and exchange rate stability and also inflation management. Before I go into the actual monetary policy statement itself, I just want to touch briefly on developments on the global market. I think you are all aware that as a result of the geopolitics, we are seeing sluggish growth in the world, and for 2023, world growth was estimated at 3.1% and remaining the same in 2024. Going closer to home, yes, our economy has been characterized by high inflation, and this is the reason why we are here today, to try and see how we can address this challenge, which has been upon us for quite a while. However, despite the high inflationary environment, I'm pleased to say that our economy grew by 3.5% grew by 5.5% in 2023, and is projected to grow at 3.5% in 2024. But that is before we factor in the impact of this induced drought. And if you do factor it in, it's been said that we might end up with 0% growth with no policy intervention. But if we do have some policy intervention, we could achieve a better figure than that. On the external front, we continue to record the current account surplus, currently standing at 125.6 million for 2023. Now, in coming up with this monetary policy statement, we first of all did the diagnostic to say, what is it that we are trying to address? And we came up with 5 key issues that need to be addressed. First of all, there is the issue of currency and the exchange rate stability. We have witnessed exchange rate instability, currency instability in this market, and this has been driven by mainly a high demand for foreign currency as a store of value. What used to happen was that, and what is happening even until today, is that you get hold of a Zimbabwe dollar, you would want to quickly change it into the foreign currency, and more importantly, into US dollars, so that you maintain the value of your money. There has also been reduced confidence due to continued currency stability and volatility, and the wide margin between the interbank rate and the barrel market rate. There has also been reduced use of the local currency for domestic transactions. We've seen most outlets now wanting to call prices in US dollars and not accept the local currency. And there's also been lack of certainty and predictability when it comes to the exchange rate. Each morning someone will just pick up an exchange rate of their choice, and that is the rate that applies. So, in view of those factors that I've mentioned above, this policy is going to look at implementing a market-determined exchange rate determination system. And I'll talk about that more later when I give you the measures that we are going to implement. The second issue was on financial sector stability. Fortunately, this is not an issue at all. Our financial sector is very sound and stable. We have not seen any trouble trends. And as they say, if it's not broken, don't fix it. So there is nothing much that we are going to do. We just continue on the good work that the outgoing governor has done in maintaining discipline within the banking sector. Third issue, money supply growth. I've said in a previous meeting that if printing money would make nations prosperous, then there would be no nation which is a third world nation. We've learned from past experience that it does not help to print money. Certainly not under my watch. It's not going to happen. The next problem is foreign exchange mobilization and reserve accumulation. For a central bank to be able to defend its currency, it has to have reserve. And the governor has been doing a lot over the past year, quietly building up reserves. And I think again we'll talk about that later. Those who were here yesterday will witness the result of some of the work that he's doing and has been doing. And the fifth issue is to do with the promoting of local demand for the local currency. Currently, we are being told that the economy is trading 80 to 85% in US dollars, 15 to 20% in local currency. Also, we have seen that there is a major outcome on the part of the citizens when it comes to the problem of change. If you go to a shop to buy anything, you give them $1, they give you change in the form of sweets, chocolates, which you don't need. And clearly we need to address the issue of currency visibility. There have also been issues to do with lower denomination notes, people not accepting certain denominations of the local currency, sold notes, the list goes on. So to that extent, this policy seeks to come up with measures to deal with demand for the local currency. Now, turning to the new monetary policy measures that we wanted to introduce. First of all, we said, what are the objectives of this mandatory policy statement? What is it that we are trying to achieve? 4 things. Number 1, we want a solid and stable national currency for this country. It hasn't happened for many years. It is time to let that in place. We want a stable and sustainable exchange rate. We want robust policy credibility and restoration of market confidence. It is my wish that after speaking today, subsequent monetary policy statements will be just to say we are walking the talk. What we say we are going to do is what we are going to continue to do. We want a stable and sustainable macroeconomy as envisioned in Vision 2030 and also in LTS1. So, with those 4 pillars in mind, we would want to implement the monetary policy statement in a sequential manner. Some of the things we've already started happening, we just did not be told about it. First of all, determination of a market-determined exchange rate, efficient and optimal money supply management, introduction of a new structured currency, anchoring of the currency on reserves, mainly gold and foreign currency balances, and of course other measures that I'm also going to cover later on. Let's start with the adoption of market-determined exchange rate system. You would have noticed that from January, the central bank has allowed the exchange rate to float freely and to be determined by market forces. And we've been watching, because that is what you've asked for in the past. And we say, there you have it, the rate is floating. And the rate has been moving, and I'm happy to say, the gap between the interbank rate and the parallel market rate has reduced significantly because of that policy stance that we are adopting. So this is something that has already been implemented and that will continue implementing going forward. We are going to have a foreign exchange market that is managed on a willing seller, willing buyer basis. The central bank is going to play a role in that it is going to use funds from the 25% forex surrender to ensure that there is liquidity in the foreign exchange market. Efficient and optimal money supply management. Under my watch, we are going to ensure that at any one time, reserve money growth is contained within the limits of the growth in gold and foreign currency reserves that we have. We are also going to continue on the tight monetary policy stance that has been the hallmark of the central bank up until now. And above all, I don't believe in quasi-fiscal activities. It's not going to happen under my watch. My mandate, as spelled out in the Reserve Bank Act, is very clear. And I have no intention whatsoever to do other people's jobs. Or do my job as central banker, as defined in the Reserve Bank Act. In that respect, we have moved all quasi-fiscal obligations that have been created, some not out of our making. I think the governor will tell you that we had a foreign exchange crisis and he had to do something to address that. In fact, he has a good term for that. He calls them foreign currency fiscal operations. But that is the past. We are not going to be involved in any quasi-fiscal operation. We have moved the balances to the treasury in an effort to clean up the balance sheet of the central bank. In that respect also, people have said that, well, the problem is that Treasury from time to time will come and borrow money from the central bank. Again, under my watch, if there is going to be any accommodation at all, Treasury, it will be within the limits contained in the Reserve Bank Agreement. The Reserve Bank is very clear in that respect. Let's move on to introduction of a new structured currency. I've been receiving questions to say, what is a structured currency? Let me read the definition of a structured currency for all of you to understand. A structured currency is generally defined as a currency that is pegged to a specific exchange rate or currency basket and backed by a bundle of foreign exchange assets, potentially including gold. This means that a central bank can only issue domestic notes and coins when fully backed by a foreign reserve currency or foreign exchange assets, and that the currency is fully convertible in the reserve bank currency, on demand. That is the definition of a structured currency. The structured currency that we are introducing as Zimbabwe is going to be backed by a basket comprising foreign exchange that we already hold in our national account and precious metals that we are collecting as royalties from the precious minerals that are being mined in this country. And we are holding these as reserves at the central bank. And these comprise mostly gold. So, with effect from today, the 5th of April 2024, banks shall convert the current Zimbabwe dollar balances into the new currency, which shall be called the Zimbabwe gold. Z, capital Z, small I, capital G, ZIG in short, to foster simplicity, certainty, predictability in our financial affairs. The new currency will co-circulate with other foreign currencies in the country. I've been seeing stories on social media, people saying the central bank wants to convert our nostro balances into ZIG. Nothing of that sort is going to happen. Certainly not under my watch. I don't believe in taking people's assets. The multi-currency regime is there to stay. I keep going to get as an unsettled in the SI. And the ZIG currency is going to co-circulate in the economy with all the other currencies that we are using. The swap rate will be guided by the closing interbank exchange rate today, and will be used to make legitimate conversions of all Zimbabwe dollar balances in the banking sector, all loans and advances made by the banking sector, all Zimbabwe dollar denominated treasury bills, all outstanding auction allotments, all export surrender requirements, obligations, all prices of goods and services, and any other denominated obligation. So if you owe someone or someone owes you $1 million Zimbabwe dollars, it is converting into ZIG. You don't want someone saying, I owe you Zimbabwe dollars, and you don't know this, so I won't pay you. It's going to convert. On conversion, all current Zimbabwe dollar balances, banks are directed to rename all the Zimbabwe dollar accounts as ZIG accounts. In other words, what used to be RTGS and operating under the RTGS platform is now ZIG. Gold-backed digital tokens accounts which were previously known as ZIG will no longer be known as ZIG, but will be known as gold-backed digital token accounts or GBDT accounts. So there is that demarcation. Gold-backed digital tokens are not the ZIG currency. They are an investment instrument as they have always been. All Zimbabwe dollar notes and coins held by account holders will be credited into their ZIG accounts using the applicable conversion rate, conversion factor. The banks will continue to accept these deposits for a period of 21 days after today. The Reserve Bank has made special arrangements for those in the outlying areas who may not have bank accounts, and we have made arrangements with POSB and AFC Commercial Bank, and they will take their cash to these banks, and that cash will be converted for ZIG. However, KYC will apply. If anyone is going to bring notes worth above $100,000, you need to know where you got it, why you've been keeping it. This is usual KYC requirements. Issuance of new banknotes and coins. ZIG coins are going to be issued, ZIG notes and coins are going to be issued in denominations of 1 ZIG, 2 ZIG, 5 ZIG, 10 ZIG, 20 ZIG, 50 ZIG, 100 ZIG, and 200 ZIG. And then for divisibility, we are also going to have coins which will be half a ZIG and a quarter of a ZIG. To complement that, because as I said earlier on, we've been having a problem of change with someone, because 1 ZIG, when you work out roughly, is going to be equal to 6 US cents. If we leave it at 1 ZIG, it means the smallest thing you can buy will be for 6 US cents. So we need to further break down that 1 ZIG into smaller coin denominations. This is the new currency. Its specimen is already new. I think we're going to spend it one way. But we will pass it around so that people can see. You can like this every day after.
Could we suggest the government to hold it in the way? Please. This side once and back side.
This is once. This is 2 ZIG.
Side. This side again. The next one, please. This side, please. This side. This side. Can you hold the beat? Can you hold the beat of the
Yeah.
One more.
Thank you. So, what is going to anger this currency? Because I gave you the definition of the structured currency, and it says that such a currency must be anchored by reserves in the form of forex or by commodities such as gold. ZIG shall at all times be fully anchored and fully backed by a composite basket of reserves comprising foreign currency, precious metals, mainly gold, received by the Reserve Bank as part of in-kind royalties and kept in the vaults of the bank. Foreign currency balances will be accumulated through market purchases from the 25% surrender, as well as sale of some precious metals that may not have been received in the forward. For example, platinum. As of today, 5th April 2024, the Reserve Bank's reserve asset holdings comprise plus or minus $100 million in nostro balances. This is foreign exchange that we already hold. We also have 2,522 kilograms of gold worth 185 million, of which 1 ton of that gold is held offshore and the balance is onshore. Those of you who were here yesterday, you would have seen that out of the need for transparency, and also for me to confirm to His Excellency that I have taken over what Dr. Mabuda left in the Central Bank. We opened the vaults of the Central Bank and you were able to see the gold that we are holding. I saw that on social media, some of you were saying, oh, you only got 2.5 tons of gold, you're converting it and coming up with a number and converting it to import card. And then I said to myself, are these people real economic analysts? Don't they know that Zimbabwe is 80 to 85% dollarized? Therefore, we already have 85% of the money circulating in this country as foreign exchange before we even factor what is going to be converted to C. As it stands currently, our entire local currency component of reserve money, which is what we use, reserve money in Zim dollars, as it stands, is at 2.6 trillion Zimbabwe dollars. If you convert that at today's closing price, it will give you a closing interbank exchange rate. It will give you almost 80 million US dollars. Now, let's do the next. I told you that I've got 100 million cash, most of balance, and I've got 185 million worth of gold, total 285 million. This entire market, the Zim dollars that are circulating, are worth 80 million. I can buy the entire stock of Zimbabwe dollars, all of it, without stressing the Central Bank, because I could more than 3 times come. So, as I said to the bankers early this morning, if you want to tell me, if you want to bet against the dollar, it's game one. Because I will buy all your currency. And then, when I talk about the other measures that are coming in, when you're desperate for that seat, I'll sell it to you at my price. Also, just for noting, last year the Central Bank was selling gold coins. Because some of you were saying, oh, where is all that gold? It's in your pocket. We gave you gold coins and you were paying for those in Zim dollars. And that's almost a ton of gold that we sold to you. But some of you were saying there's some missing gold somewhere. My brother, Dr. John, is a Christian. He doesn't take people's money. Exchange rate management system. So, the starting exchange rate, as I said, will be determined by the prevailing closing interbank rate. And I've just been given the numbers today so that those of you who are good at maths can do their maths. The rate, the interbank rate today closed at 33,903.9916. And the gold PM fix as for yesterday was $2,293.50 per ounce. That gives you a conversion factor of 2,500 and the starting exchange rate for the ZIG to USD of 13.5616. As you can see, we are doing everything transparently. Starting exchange rate 13.5616. That's the rate that you will be opening with it from month to month. Subsequent to this, the intervening exchange rate will be market determined, but mostly influenced by the price of gold and also the exchange rates for the other currencies that comprise the basket, as well as inflation differentials between us and the nations of the currencies that we'll be using. And the way it's obvious, it will tell the exchange rate will depend on, in the basket, if there's more gold than everything else, then the exchange rate will be more influenced than gold other than by any other thing. Foreign exchange liquidity management. The bank will use 50% of the foreign currency proceeds from surrender requirements for strategic interventions in the foreign exchange market. What I'm saying is that when we get money being surrendered under the 25% arrangement, we use half of that money to go into the market. So, over and above the reserves that the central bank has, we also have an additional amount that will be getting as we purchase foreign currency for surrender and putting it back into the market to ensure that the market, the foreign exchange situation is always liquid. The remaining currency, balance of the currency after that 50% will be used to satisfy government's foreign exchange requirements and obligations, and also will be used to increase the reserves of the central bank. I'm starting with total reserves of 285 million. Dr. Mahmoud has said to me, after 2 years, he wants to see all those bonds full of gold. It's achieved. Foreign exchange, foreign currency retention thresholds remain standardized at 75% across the board, except for small-scale gold producers. So what we are saying is that unless you are a small-scale gold producer, everyone, when you receive your foreign exchange export receipts, you must surrender 25%. I am a stickler to rules. This country is not animal farm. There are no people who are more equal than others. If it's 25%, it's 25% for everyone. And I am not going to entertain anyone coming to my office and saying, but I'm so and so, I need to retain 100%. It ain't gonna happen under my order. So, if there are any exporters here beyond, I will not entertain those requests. We need foreign exchange to oil this economy, and it can only come from exports. If you are going to say you are going to keep your oil exports to yourself, how else is the nation going to pay for it? Interest rate policy. The bank has recalibrated the bank policy rate from 130% per annum to 20% per annum, consistent with the new monetary policy framework. The overnight accommodation interest rate has been set at 5% above the bank policy rate, and the bank deposit facility interest rate at 7.5% below the bank policy rate, thus giving the starting interest rate corridor of between 11% to 25%. The bank policy rate and the corresponding interest rate corridor will be reviewed by the Monetary Policy Committee from time to time in line with inflation development. Banks have been accused in the past of not paying interest on deposits. I know I stayed guilty as charged. I used to be one of them. I'm no longer. So, going forward, the minimum savings and time deposit interest rates on SIG are set at 9% and 7.5% below the deposit facility rate of 12.5%, meaning that 12.5% minus 9% is your minimum savings rate, and 12.5% minus 7.5% is your minimum rate for time deposits. Minimum interest rates on FCA deposits remain unchanged at 1% and 2.5% for savings and time deposits respectively. open market operations. Going forward, open market operations will be carried out to ensure that at any one time, reserve money will be fully backed by a corresponding composite basket of reserves comprising precious minerals, mainly gold, and foreign currency balances. In other words, we are never going to have a situation where if we have got $1 in reserves, we have got $1 in currency circulation. We will have $1 or less in currency circulation. All non-current interests bearing non-negotiable certificates of deposits, NNCDs on ZIC, in ZIC, beyond the optimal liquidity level and above the encumbered, and those encumbered by foreign exchange currency structure will be converted into tenures of 1 year and above. Statutory reserve requirements. The statutory reserve requirements for demand deposits in ZIC and savings and time deposits in ZIC remain standardized at 15% and 5% respectively. However, in order to continue to foster continued financial sector stability in the face of increased lending in foreign currency, measures will be put in place to enhance foreign exchange liquidity, moderate foreign currency exposures, and mitigate against payment gridlocks in the banking sector. In this regard, the bank is increasing the statutory reserve ratio for foreign currency demand deposits from 15% to 20% with effect from 8 April 2024. What I mean by that is that when banks lend money in forex from local forex deposits, there is an element of printing money, and we do not want to create virtual dollars in this market, as has happened before in 2017. Hence, we are introducing this measure to try and curtail lending using local foreign currency deposits in this market. We have no problem if a bank secures a line of credit, they can lend 100% of it. The bank is, the statutory reserve requirements for foreign currency time and savings deposits shall, however, remain at the current level of 5%. All treasury bills previously denominated in Zimbabwe dollars will be converted to ZIC and the interest rates adjusted accordingly. As I mentioned earlier on, there has been an outcry as far as bank charges are concerned. Again, I used to be in the commercial banking sector and I still guilty as charged. But we cannot continue to have a situation where a tobacco farmer from Zimbabwe sells their tobacco, uses the money, and maybe leaves $100 in the account, and by the time they come back next season, the money is now minus 100. What happened to the 100? So, with immediate effect, banks will not charge monthly bank maintenance or service charges for individual bank accounts with a conservative balance, a daily balance of $100 and below, or its equivalent in ZIC to a period of up to 30 days. At least if you leave your $100 in your account end of season, you should be able to find it in your account beginning of next season. Other supporting measures and obligations. I did talk earlier that one of the things we wanted to address was promoting the increased demand for local currency. In accordance with Statutory Instrument 218 of 2023, the use of the multi-currency in the economy for the settlement of any transactions was extended to 31 December 2030. And that is stated in the statutory instrument. Accordingly, measures will be put in place to gradually promote the increased use of the new structured currency as we move towards 2030. In order to foster demand for the local currency, government will make it mandatory for companies to settle at least 50% of their tax obligations on quarterly payment dates, QPDs, in SIG. This is something that we have already discussed and agreed with the ministry, that they will be issuing a statutory instrument in that regard. Also, the Reserve Bank, will continue with this strict liquidity management in order to mitigate against shocks that cause spikes in the exchange rate. Auction allotment obligation. Following the introduction of a refined interbank market, all outstanding auction allotments will be converted into SIG and issued out as NNCDs for a period of 24 months at an interest rate of 7.5%. This process will allow beneficiaries to maintain the value of their proceeds under the new framework. By the way, I may not have made it very clear, the auction is dead. We are not going to have the foreign exchange auction anymore. The last auction was held last year, and that is the last auction. Outstanding payments for auction surrender obligation, or outstanding payments for foreign exchange purchased by Treasury under the 25% surrender requirement will be converted to a SIG-denominated instrument with a tenor of 1 year at an interest rate of 7.5% per annum. Gold coins and gold-backed digital tokens. Gold coins and gold-backed digital tokens shall continue to be used as investment instruments and to manage liquidity in the economy with a view to stabilizing the currency and the exchange rate. As already indicated, the gold-backed digital token is no longer called SIG, but is now going to be called GBTT. By 8 April 2024, which is on Monday, all mobile network operators who are essential to the national financial inclusion strategy will also be expected to ensure that their customers can effortlessly transition from Zimbabwe dollar wallets to SIG wallets. Domestic pricing of goods and services. Once the local currency is denominated in SIG, all domestic traders are expected to consistently modify their pricing systems in line with the currency reforms. With immediate effect, prices for goods and services shall be converted using the conversion rate that I mentioned earlier on, and thereafter quoted in SIG for the transacting publics of goods. Within 7 days from today, all entities other than banks and MNOs are expected to have completed the configuration of their systems to conduct business in SIG. Ladies and gentlemen, if we implement these measures, we would expect them to have an impact on inflation, which we are estimating to end the year between 2 and 5% annually. So, what are the takeaways from this monetary policy statement? We have introduced a new monetary policy framework that will enable stability, simplicity, certainty, and predictability. And I hope to assist us in making this currency work. I thank you. I think we will take questions from Dr. Machi.
let me ask you to join me in thanking our governor for the eloquent presentation. And so, as you all expected, the moment has come for us to create an environment of stability, predictability, and certainty, and therefore to engender confidence in not only the currency, but also the economy at large. Let me tell you with no hesitation that I am extremely excited, and so is everybody at the Reserve Bank and within government, I hope, that these measures will go a long way from resolving some of the problems that we've been facing as a nation. With your indulgence, Governor, I will ask that we take two sets of questions. We will begin with at least 5 to begin with, and then we will take another set of 5. But as you know, the governor's time and the official's time is limited. I will ask that those who don't get a chance not to despair. They can send their additional questions through our email at the Reserve Bank, info@rbz.co.zw. I will give you that email address again later. So I will take the first 5. Let me begin by the gentleman over here.
You have said 13 times, not under my watch. This would happen, this would happen. Before, someone saying if the other TG falls from 1 to 1, I'm deciding. What will you do if what you say 13 times will not happen under my watch happen?
Okay, I wish there was a lady's hand. Is there one? At the back there, please. At the back, I can't see you.
My name is Ebenes. I just wanted to find out if you did say that the $10 balances are 80 million, why bother? Because it's such a small percentage and you're going through this whole process to protect small US dollar balances. Thank you.
Okay. Gentlemen, I think that gentleman raised up his hand first. Then I will come to you and to you. Those will be the first one.
Thank you very much. My name is Blessed Mhlangu from Hutchinson TV and Radio. I want to find out the prices of commodities that are going to be converted to ZiG. Are they going to be changing daily, tracking the exchange rate? Because, for instance, if today the bread is 1 ZiG and there's movement on the exchange rate, it means tomorrow you wake up and it's 1.5 ZiG or 1.25 ZiG. Is that movement not going to undermine the confidence and the desire to keep the local currency?
And I said, the gentleman over here.
I've heard the governor say that they are disbanding the foreign currency auction. What is the good reason why it's not being continued?
So, one more over here.
Okay, privilege Mushani, Deutsche Welle, German TV. How will in a nutshell, how will the new currency affect the daily financial transactions for the ordinary Zimbabwean?
I think that question is almost similar to the previous one. But anyway, thank you very much. I will call upon the governor to address some of these questions, and then we'll take another set, or the last set of 5 questions after his response. Governor.
So can you come to the next slide?
They want
Okay, thank you for those very interesting questions. The first question was, what will I do if what I'm saying will not happen under my watch happen? Well, what I'm saying is not happening under my watch will not happen under my watch. Because I'm not allowed it to happen. I don't know why you think I'll allow it to happen. I've just told you who I am. The value that I stand back. Why should I change? Okay, I hope that answers the question. Evidence says we have 80 million worth of Zimbabwe dollars in the economy. Why are we doing all this to protect only 80 million? We are doing what we are doing to ensure that our local currency does not die. As I said, we were already in a situation where almost 85% of transactions are being conducted in US dollars because our local currency was not living up to the function of store of value. We are going to restore that function of store of value so that we can start reviving our currency. So we are starting at 80 million worth, and as we get more reserves, we will gradually be moving towards greater use of the local currency. It is my wish that currently we are at 80-20. If we can get maybe to the year at 80-30, 70-30, the next year 60-40, the year after 50-50. By the time you get to 50-50, people will be different as to which currency they are using. And that way, we regain use of our local currency. Blessed says prices will be fluctuating daily, but exchange rates by their nature are moving on a daily basis. But one does not expect the volatility to be such that it will cause massive disruptions. We will have a basket